Hey there, welcome to the Reinsurance Podcast, the place where we dive into all things reinsurance, the coolest part of insurance. We're your hosts, Jerad and Ben, a couple of ex-practitioners who loved the industry so much we founded Supercede to tackle some of its biggest headaches. And we're here to share our insights and stories with expert guests as we uncover what's really going on in the industry.
Welcome everybody to a special news roundup episode where this month we're bringing you the month of April.
Which is an important month in reinsurance, but we still might cover Taylor Swift news.
Is it Taylor Swift?
2 new albums.
Oh, really?
No, I'm not covering it in the news. It's
No,
just
really
news.
2 new
It's
albums?
just important and things.
I only just got over the fact that she published like 4 different versions of the previous one.
Yeah, these are hard-hitting
Very
cultural
confused.
facts that we need to be aware of.
Yeah, I had to go to the till and ask at Christmas, why 2 of the same album were different and which one I should get for my friend.
Yeah, you didn't just buy Now That's What They Call Music 88?
No, I didn't. I already had that one.
I want another album of That's What I Call Music 88.
So Tay aside.
Yeah, Tay aside, April is Japan and Asian renewals. So that will be a big focus point on sort of what we're talking about. We sort of foreshadowed it at the end of March. So two stories that came out on 1/4, the sort of report from Gallagher, massively increased demand, more capacity available, sort of reinsurance pricing for Japan, specifically around flat. So all good indications for the Japanese market as we go into the summer renewals in the U.S.
Yeah, kind of unsurprising, really. I think most of the indicators at 1/1 were a much more stable renewals environment. And if anything, I know we saw across a couple of Asian markets, probably almost more capacity than we expected in a few areas. So, yeah, watching this space for more of the same. Everything feels stable. We haven't collapsed into softening, but hardening seems to have abated a bit for now.
Yeah, and I think the Japan renewals are very cat-heavy, which going into the summer is also very cat-heavy renewal season in the States and things. So hopefully good indications that we've sort of reached a plateauing there. This other news piece came out from Aon. I'm looking at the Indian market, a resurgence in property cat capacity there as well. So it seems like the theme is a shift and an increase and an acceleration in property cat. This news is interesting because it talks a bit more about how the penetration across India is low, but with the cat capacity increasing for India, and alongside some government initiatives to improve the insurance penetration over the next decade or two, all of these things sort of hopefully creating a perfect storm of increasing the market size full stop here. So a region and a country to watch, I think, a bit more as well.
Absolutely, and not surprising, I guess, to see some of those insights coming out of Aon, who have just closed a big acquisition in that market as well.
Indeed. And staying on the theme of catastrophes, massive storms in Dubai.
Yes.
Just ahead of DWIC, Dubai World Insurance Conference, which the very own Supercede's Tom Spire will be attending.
Say hi from us.
Say hi from us. But massive storms in Dubai. Huge amount of flooding. The insurers are expecting significant amount of property and motor damage claims and things coming out there.
Did you hear the conspiracy theory on this, which might actually be true? It's just I heard it in passing in a coffee shop and have yet to investigate.
It's Taylor Swift's fault. That would be a twist.
It would be a twist. No, apparently there was and I like the theory of it if it is from not from a conspiratorial point of view, but from a whoa, can science do that point of view? That possibly weather engineering was at play in trying to increase the amount of rainfall that reaches an otherwise quite arid landscape. And maybe the engineering was a little too successful. But I have no evidence to back that up, and I don't want to go full
But it's an area
JR
that's...
on that one.
Yeah, exactly.
So who knows? But a random person in a coffee shop that I didn't know said that it was because of that.
Yeah,
I think it could be a lie.
Yeah.
or it could be the truth. But I don't think that they should be equally credited. I think
random
you should do
dude
your
in the
own
coffee
research.
shop is usually pretty
Accurate.
buttoned up, right? So I don't have any reason why you should doubt that. But in an area that's very famous for like creating land masses that look like palm trees, and like we now
Yeah,
create
that's true.
islands, so not entirely out of step for their approach to manipulating the planet to their benefits. So
Or just climate change.
also possible. Let's go back to the guy in the coffee shop and dig in deeper to his sources.
But highest rainfall recorded in 80 years, I think.
Yeah, huge.
Since records
huge
began.
flooding. Yeah,
So,
and what we saw sort of when we had sort of really dry summer last year is the more arid the climate, the harder it is for rainfall to like be absorbed into the soil and things. So
Yeah.
it probably all compounded to be quite a perfect storm of
Absolutely.
sort of result there. But it has quite a lot of reinsurance coverage in that sector. So we'll see how much that hits the reinsurance. Probably quite
a lot. Yeah, this was the
Yeah.
interesting part that was reported on, was that the local insurance companies are typically not capitalizing, for events like that, and so this was considered a reinsurance event, pretty much holistically extreme enough that most of it is going to be covered by the reinsurance markets. So yeah.
Sort of shifting back into sort of forward looking into the end of the year, some information has come out here from Gallagher Vickers talking about the reinsurers being clear about their retro structures and capacity. I think that clarity around what they're buying retro on, how much capacity is being available as a result of retro relationships, being maybe part of the reason why we're seeing this increase in cat capacity across these various sectors. So.
Yeah, it's an interesting one, isn't it? Because you've got lessons learned, I suppose, from a couple of years ago, where the lack of clarity around retro meant that everything got shifted back to be a fairly last-minute, disorderly renewal season. But then, understandably, they're trying to get ahead of it this year. But equally, we're expecting, according to most forecasters, the hurricane season from hell. So. Even if we can get some sort of commitment or early indication towards what levels of retro capacity are going to be needed going into 1/1/2025 and beyond, who knows, that might change a bit once August, September, October have blown through.
Yeah.
So we'll watch and see.
Yeah, and we're introducing some of like the challenges that the industry still faces, right, as we sort of wrestle with these things and the impact climate change is having on the size of these events. One of the other things that's come up from Gallagher here is they're talking about loss underestimation being a pressing issue, and it's referencing here sort of on Nat Cat and climate reports. It's underscoring the need for the insurance industry to evaluate like the unexpected factors, and if we're underestimating what we think losses are going to look like, it's sort of you're sort of having losses creep as they develop further and further, and it's making it harder for the industry to sort of still come to terms with where these losses might bottom out at. So definitely not an easy thing for the industry to wrestle with, but something that needs to be solved for a bit more.
Especially with a somewhat limited track record when it comes to data and information management and sharing that easily between insurers and reinsurers, right? We're good at doing a kind of snapshot once a year, not so much during events and what has changed since then, etc.
Yeah.
What do you mean the portrait I gave you of my portfolio 1 year in advance doesn't tell you exactly what our portfolio looked like, having then written it?
Yeah. Well, and very relatedly here, the next story we got is syndicates expense ratio broadly uncorrelated with scale. Like, and to your exact point, like the data issue that we wrestle with as an industry is sometimes so systemic that like the big companies don't really benefit that much more than a small companies will on an expense ratio basis, because they're not able to sort of get their head around what pricing might look like and anything else. And I think what we've promised with like the younger, smaller companies that like are unencumbered by legacy doesn't equal that good data, right? Unencumbered by legacy means like you don't have to wrestle with like historical system issues, but like you still need to figure out a way to capture and collect quality data and transmit that data to your partners.
Absolutely. I think we talk a lot about how the industry needs to transition towards more of a portfolio underwriting approach where, rather than being a one at a time, risk writer, that model doesn't scale very well. You need to get to a point where, as your organization grows, you can have individual humans who have responsibility for quite large portfolios of risk, but they can't do that without great data.
Yeah, yeah. And the very last story we've got here teed up for this month was early in April, but you had the Francis Scott Key Bridge collapse in Baltimore as the massive shipping container vessel just plowed into one of the pillars, and huge industry event there.
Yes.
Looking like billions, possibly up to a maximum of $3 billion that people are projecting at now with current estimates. So, big marine loss here.
Yeah, I think we're watching things, come out the back of that. I think $3 billion was the sort of direct loss estimated for reinsurers, but there's potential for it to spread into other business interruption-y type things beyond that. In general, though, this is seen as probably the biggest loss since Costa Concordia, if not bigger. But all the same, manageable within the context of diversified reinsurance portfolios, right? You saw Munich Re publish or a recent profit of like $2 billion, I think, this quarter. So, it's going to be maybe earnings at best. At worst, it's not going to be sort of existential for anyone.
Yeah, well, and that's what you see on these is the reason the cat stuff is so important is because that's where you have like existential challenges from books. Like, $3 billion is like frustrating. People are going to be pinched on it, but it can be covered by balance sheet, capital and things. So, it looks like it's covered by AXXL, and it's got the $100 million retention there. So it'll be an interesting one to see how this sort of plays out. But you're right, it's a big event, and it's certainly newsworthy in where it happened and the resulting sort of damage that came out of it.
I quite liked,
but in terms of an industry shift, we're not going to see anything from this.
Yeah, no, I quite liked the industry response to it as well. I thought John Neal did a very good job as a spokesperson, stepping forward and said, well, this is a really visually shocking and public event, where the world is watching to see how insurance responds. So let's get on with it. Let's start paying claims. We can see where the damage has happened. We can see what needs paying for and what needs doing. So let's just get on with it and show them what we can do. So I thought it's a really positive.
Yeah, it's good to see that sort of leadership from Lloyd's, which is the biggest marine market still in the world. So excellent stuff there. So that's the end of news for April. So coming up, we've got a tee up for the summer renewals in May. So we will get ready for all of the updates on market conditions and what we think pricing will happen for summer renewals in that one. So we will see you next month.
Have a wonderful May, everyone. May the 4th be with you. Thanks for tuning in to the Reinsurance Podcast. If you enjoyed our show, don't forget to subscribe wherever you get your podcasts and leave us a review to let us know how we're doing, preferably 5 stars. For more insights and updates, follow us on LinkedIn and visit our website at supercede.com/podcasts. You'll find the links in the show notes.